Hello, welcome to New Economic Thinking. I'm here today with Andrew Shing, a distinguished fellow at the Fung Global Institute. Andrew, thank you very much for joining us today. I was at a conference dealing with China's financial reforms recently. There was talk about the usual suspects, liberalization of the RMB, the proper sequencing capital account versus current account. But it seemed to me that we were spending all of our time discussing means rather than ends. And I sometimes wonder whether the Chinese authorities have lost sight of what the ultimate end game is in these endless discussions about financial liberalization.
I don't think they've lost sight. In fact, in the third plenum only about 2 years ago, they set out the New China Dream. And the New China Dream is basically to try and focus everybody away from GDP as an indicator towards a future that is more socially inclusive, environmentally sustainable, and moving, beyond the middle income trap. So it's a very a daring, very bold, very comprehensive plan. The big issue is actually how to get there, right? So now, for the last 2 years, concentration has been you can't get there with corruption. You got to tackle corruption, and they've been very, very firm on this. And then you can't just focus on GDP, you need to have a more comprehensive indicator. So they've understood that in the evaluation of the meritocracy, bureaucracy, you need to switch away from let's just get the biggest GDP number you can find by using steroids. No, you can't do that. What you now need to do is to have a 360-degree evaluation, that you have much more complex KPIs, key performance indicators, on what makes people happy, makes people more engaged. You need to bring humanity back into the idea of measuring happiness of the people.
So it's not just making virtue of necessity, because we have been seeing lower GDP numbers, and you're not suggesting, for example, that these reforms have come because of necessity the Chinese economy is beginning to slow down, and so therefore let's focus on the social initiatives.
It is. The Chinese reforms sometimes come from what they call, you make the options when there are no options. I mean, all the drivers of Chinese growth in the last 30 years was because of the openness to the global economy, a very friendly global environment, trade was open. The switch out of the rural areas to the urbanization, very favorable demographics, and rise in global technology. The Chinese benefited from all those, right?
And that's starting to reverse a little bit now.
But everything is headwind now, right? China's on the export side, on the WTO, done very, very well. There are signs of protectionism, limits of that growth area. Urbanization is still running fourth, but inequality has increased. Environmental pollution is a major problem. The population is beginning to age. So the only sort of new dividend comes from reform. And so therefore they say we need to reform, but we need to reform in what the English phrase is called new normal, but actually it's probably not a very good translation. What it really says, it's new thinking. It's new understanding that the norms of future growth is going to change. It's no longer to be 10-12% growth. It's going to be somewhere between 6 to 7% growth. And 6 to 7% growth when you're already a 10 trillion economy is not bad at all, right? You're adding 600 billion. You're adding 600 billion new growth every year to the economy. And of course, it will be less investment driven. It will be more consumption driven. And it will concentrate on improving the livelihoods of the majority of the people. For example, they are still increasing minimum wage and real wage increases 12 to 13% per year since 2007. Now that's massive by any standards when your real growth rate is only 6%.
And is that starting to create inflationary problems within the economy?
No, there doesn't seem to be that much inflation, and this is partly due to global environment. Oil prices are lower, commodity prices are lower, even though there's quantitative easing. The People's Bank understand very clearly that during the transition from an old polluting industrial base to a new economy, service-oriented, information technology, e-retailing, all these structural changes that are going in the Chinese economy, your liquidity provision may be a little bit more than the traditional way of doing basically a kind of a tailor's rule on how much liquidity you need to provide.
You mentioned before, the inequality aspect. That's actually been growing quite rapidly in China. How do you think the authorities are trying to deal with that?
Well, the anti-corruption is one part of it. Clearly, some people got their funds illegally. A lot of the problems relate to wealth ownership. And I think the Chinese authorities understand now that even though 80% of Chinese people own their own houses, the young, the displaced, the migrant population don't have that access. So they're building something like about 800,000 what they call affordable housing every year, right? And the reason is very straightforward. There are, 1%, which is what 1.3 million people in the rural areas moving into the urban areas every year in China.
And that's not slowing down at all. That's still got a fair ways to run, in your opinion.
Well, we see this phenomenon of urbanization and the new urban poor globally, right? When you have been educated in the rural areas, your access to information is not so great. You move to the urban areas, you have the cluster effect. You have access to information. You have access to internet. You have, access to skills and knowledges you never had before. So that creates its own dynamics. And this is a lesson that I think the Chinese authorities have begun to understand. Chinese growth in the last 30 years was really due to a very large urbanization clustering effect, building hubs of supply chains that were able to deliver world-class productivity, thanks to world-class technology, the import of it, right? But today, some of those industries are polluting. There's a huge excess capacity. They haven't followed market signals. They just kind of, the old way, you build and the business will come. Well, it's no longer that. You need to follow market signals. But in order to be able to do this, you need to start getting the right pricing of money. So interest rates need to be liberalized, exchange rate need to be liberalized. You need to get the bureaucracy to get away from quantitative signals to qualitative and more price signals.
I want to go back to the question of financial liberalization. As you say, it's designed in part to create the right price signals. But of course, the Chinese economy, there's effectively three Chinese economies. There is the old state-driven economy, which is still at least 50%. You've got the so-called dirigist Japanese-style model, where you've got a state-driven capitalism, but it's essentially done by private sector. And then I would say you've got the so-called Wild West, the real estate speculation. And it's the interplay amongst those three sectors which creates its own kinds of tensions. So in a sense, trying to deal, for example, to curb with real estate speculation, for example, does endanger the growth of the Chinese economy. It seems to me that you risk setting in motion a debt deflation, and then it seems to me that at that point the Chinese use the state sector as an almost stabilizing mechanism.
Well, I think people don't quite understand this. There is this image that the state-owned enterprises are all, kind of inefficient, very bad institutions. But China was built on these state-owned enterprises, providing the new airports, the high-speed rails, all the highways, all
which
the water.
Incidentally is what used to happen in the US as well.
Exactly. So they've done their work, but some of them, went awry, And now they realize they need to correct this. Now, if you look at Inequality's recent work on China, he would have basically said, China has become much more privatized. The private sector is now accounting for roughly 70% of GDP. The private sector is now driving 90% of the job creation, and probably 90% of the innovation. So the where the Chinese are struggling with is that the state sector needs to step back, regroup, rethink where their proper role in society is. Let me give you an illustration. You talk about real estate. Well, who owns a lot of this real estate? Answer, it's the local government state-owned enterprises. If you go down to cities in China at the many levels, you will find that the local hotel is owned by the local government authorities. It may be franchised to Shangri-La or Marriott or wherever, but the ownership rests in private hands. In public hands. Some of these inefficiencies they don't need to do. They need to privatize that. They need to privatize that in order to, or sell it in order to, clear off their debt. They did this because in a rising real estate market, anybody who's able to get funds to build the right infrastructure and the right piece of real estate made money. Today, the headwinds are much more complicated. The cash flow is not quite there. So here is the real opportunity for China to rebalance the real function of the state-owned enterprises, the bureaucracy, whoever implements the rule of law, and the private sector.
And when you sell these enterprises to the private sector, how do you avoid the problem of cronyism? Do you have transparent private sector auctions, or do they tend to be sold off to?
This area is still a work in progress. Basically, if you really look at what they've been doing the last 2 years, they have created negative lists. Negative list means if the law doesn't say anything about it, you can do it. In the old days, if the law says is silent on the subject,
you can't do it.
You can do it, and you can only do it with my permission, right? So the Chinese are experimenting for the first time ever in its 4,000 years of Chinese bureaucracy, negative lists, right? And this is very powerful. And the central government has now delegated local governments many licensing and approval procedures. And they're also telling the local government bureaucracies, start allowing the private sector into these sort of areas. So they are allowing more and more private sector banks. They are allowing joint ventures between the Alibaba types, the Baidus, the Tencents of this world, to joint venture with the large state-owned banks to provide internet platforms and compete with each other. All this is happening at speeds that nobody imagined was there before. So if you just take the kind of normal look and say, wow, China's going to head for a crisis, forget it. My view is that the Chinese are very good at handling crisis. They have a little bit of problems dealing with prosperity. And we have this prosperity now that is not quite there yet, is not equally shared. And that's how they're beginning to try and shift the mentality of the bureaucrat, not to do what's good for the bureaucracy, not good for myself, because that's corruption, but how to allow the market forces to change the Chinese economy along a more rule of law path. Now, that's not easy because that has not been in the traditions of Chinese bureaucracy for millennia, put it this way.
Especially when you've got a political monopoly, it makes it that much harder to achieve that.
Yeah. But the point is that it's trying to manage a transition in which the system is more representative in terms of feedback. Okay, and in order to do this, some consolidation of the powers to do this is necessary.
Are you alarmed at the substantial buildup of private debt that we've seen in China over the last few years? I mean, it's been growing at an exponential rate.
The problem with the debt issue, in my view, is not what the debt is, the debt number, but where is the asset? Because for every debt you either have the asset or you have the consumption, right? If you borrow money to consume, you get no asset and only a liability. But if you actually borrow to invest in asset, then the second question is, what's the quality of that asset? If the asset is still there, it's actually, you can do something with it. Now, then the second question you ask from that asset is, who's managing that asset rightly? The state or the private sector? If we believe that the private sector can manage it better, let the private sector do it. If you believe there's certain infrastructure only the public sector can do, right, then let the public sector do it. So, the Chinese are extremely practical over this.
But,
right?
why is why is the buildup so high in foreign debt in particular?
Although the foreign debt problem is that if you most of the debt in China is actually highly concentrated. It's either in the state-owned enterprises or in the local governments, or in certain private enterprises that discovered that, look, if there are controls over interest rates in China and access to funding, why don't I borrow US dollars, right, convert it into renminbi, and then I can finance a project in real estate in which my real so-called return could be 20-25%.
Assuming, of course, that the exchange rate remains
Exactly,
stable.
exactly, right? So the only way you can stop this is to allow a certain amount of flexibility on the exchange rate and allow a certain amount of flexibility in the interest rate, right? And then they're beginning to look very closely at who's doing all this concentrated borrowing, and maybe you need to deal with it.
So and of course there's always a balancing act, because on the one hand you want to punish the speculators, or at least punish the people that make the mistakes so that they'll learn from them. But of course you don't want to create this great debt deflation dynamic, and so
that's right. I think people don't quite appreciate that. You need to look at, and this is a very old Chinese tradition, that China is best understood as a very Darwinian trial and error, complex adaptive economy. It just adapts to its new situation, right? A century ago, it almost was dismembered, right? But it adapted, and then it modernized, and then it opened up. It's adapting to the very complex changes, the demographic changes, the technological changes, the globalization changes. Now here, what is happening is that it realizes that the old model of kind of state-led growth has reached its limits. So therefore, you need to have private sector to do this. But if you completely liberalize, you may get all these excessive debt situations that you need to sort out. So you need to start thinking about how to control that area, how to use the best quality of the assets that you have, and promote that area of growth. Okay.
And do you think that the type of capitalism that emerges, is it going to be more of an American style, very market-driven form, or do you think it will take the more traditional Asian form, where there's an element of strong dirigisme from the state government, even though it may be the private sector that emulates it? For example, in areas such as solar power, wind power, and even civil aviation, you still seem to be seeing a very, very strong guiding hand from the state, which we used to do, as I said, in the United States. There doesn't seem to be this laissez-faire, let the market decide everything.
Well, what was American innovation built on? Number one, the decision to build the state-owned enterprises in terms of the Tennessee Valley, right? The big highways. And then you had high concentration in corporations with entrepreneurs who decided that's what I want to do. And in China, if you think through the Chinese economy, it doesn't have, its fundamental energy source is coal, which is highly polluting. So if solar is going to be an area, the only way you can bring solar costs down is you have scale, which is exactly what the Chinese have done. They've, they may have subsidized a bit, this area, but and you may complain that
they've done exactly what Bill Janeway would argue that the state should always do in the innovation economy, which is that they became a loss leader, driving down input costs and made it a much more readily accessible technology.
Right. Absolutely, they didn't do this because they were
subsidizing, for example.
No. They did subsidize. Nobody. Let's not deny this.
Yeah.
They approached the whole problem was, I need to get from A to B. The only way I can get to A to B is that we need to kind of subsidize the uncertainty, get to the economies of scale, and all of a sudden, the whole world begins to benefit with cheaper solar power as a viable alternative, right?
Yeah.
Now, are the Chinese, system paying for it? Yes. So it's a trial and error situation. You can have trial, but you must have errors. And so where the Chinese economy is having a bit of digestion problem is that those errors needed to go away. So either you make them bankrupt, or they become non-performing loans and then they become restructured. Somebody's got to bear the loss. So if you think through this whole thing, you can't have perfection in this. Trial and error means that there are huge uncertainties out there. You will make mistakes. But if you don't make the mistakes, no pain, no gain, right? So they are experimenting with a trial and error in a new complex environment with huge global competition, changing geopolitical environment, climate change, social inequality. But those risks need to be taken, and where the failures are, they now need to get them out, because if not, the failures then become drags on the economy.
And can they allow those failures to happen without engendering a major financial crisis in your view?
Well, this is where I think is the $64 billion question. I think is probably the right way to put it. It's no longer 64,000. That's for sure. I think you notice what has happened is that they first dip their water, so they begin to allow a couple of failures, and then. If the market seems to be able to take those couple of failures, let's a few more, and eventually the whole system will become institutionalized.
And if it goes too far, they can still use the state-owned enterprises to stabilize it.
That's right. So my recent study on shadow banking in China at the Fung Global Institute basically said, look, from a macro perspective, the Chinese have enough fiscal space. Central government debt is relatively low, household savings is still very high, household debt is relatively low. The problem lies in the growing debt that is highly concentrated. So if it's highly concentrated, you can deal with this. If the whole household sector has overburdened with debt, then you're really in trouble.
Which is effectively what was the problem with the U.S. economy around 2008.
Exactly. So, from the macro perspective, the game is manageable. But you now have a time issue. You need to deal with the bad enterprises, the failed borrowers, and get them out of the system as fast as possible. Because if you don't, they'll drag the whole economy. And if you're growing at 12%, a 1 or 2% drag by some failures, no big deal. 6%, you can't afford it. So you need to be tough on these sort of issues. And one thing for sure, I think the authorities know that they're struggling with this.
But on balance, you're an optimist.
On the balance, I'm optimist. There's no doubt there are huge risks. I mean, people complain that, I said that, there's so many ghost towns out there. I said, if you're going to have a housing boom, are you surprised you've got ghost towns? That's the error, right? That's the housing boom is a trial. The error is the ghost town. So the secret is to get rid of these ghost towns, either selling them, closing them down or whatever. But they still need to do it.
Andrew Sheng, thank you very much for joining us today. This was very interesting.
Not at all. Thank you, Marshall.